Hello, it's Friday the 26th. I'm FX Plu and this is CurrencyTransfer.com's market update. And the headlines today are that the Italian budget is rejected by Brussels, sterling falls further as no deal begins to take root, and the dollar rally continues. ECB President Mario Draghi gave one of his more downbeat appraisals of the Eurozone economy yesterday. Interest rates remain unchanged and the asset purchase scheme will continue along plans to be halved to 15 billion a month. It maintains the objective of winding that programme down completely by the end of the year, but he did not confirm that that was a firm date, leaving himself a little flexibility on the matter. Regarding Eurozone data, he simply confirmed that incoming information is somewhat weaker than expected. With respect to Italy, he commented that monetary policy would be impossible to manage without fiscal responsibility being taken by the individual member states of the Eurozone. How's that for a slap in the face? But Brussels did officially reject Italy's budget, calling it a conscious and open effort against their commitments. Rome now has 3 weeks to prepare a new budget, but it's a lot more likely that they will ignore that, and the market instead has got 3 weeks to wait before further clashes between the two. It's unlikely Italy will pay any attention to that, backing their plans to put Italy first. The euro therefore continued its recent downward trajectory, although the pace has slowed ever so slightly, and euro dollar reached a low of 113.55 yesterday. That is still maintaining a level above the year low. In the UK, the idea of a no Brexit deal is gaining momentum as the Irish border and the backstop have created a pretty much impossible scenario. Whilst negotiations no doubt do continue behind the scenes, each side seems to have retreated, waiting for the other to come up with a new proposal, which is very much required to make any further progress. The market acceptance of the bleak outlook saw the pound to continue its fall across the board against both dollar and euro. Cable fell through 128 to touch a low of 127.95 yesterday, and sterling euro fell to 112.60. Over in the US, the dollar index continues to challenge year highs. We saw 96.75 on the day yesterday, and showing no negative reaction to the number of explosive devices that have been delivered to American politicians over the past 48 hours. President Trump continues to exude complete confidence in the midterm elections, and analysts are suggesting, or despite analysts' suggestion rather, of an 85% chance that the Democrats will win enough seats to take control of the House of Representatives. The Senate, meanwhile, is a little bit more in the balance, and the market is giving about a 22% chance that the Democrats will turn over control. We'll see how much the political map changes in the next few days, but with the economy still growing, which will be confirmed by Q3 GDP data later today, and with the interest rate differentials continuing to rise, it's unlikely the dollar will see much of a fall. Have a great weekend. I'll see you next week.